Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Well, with all the emotional trading going on and all the uh, global ramifications, there's been a lot of volatility in all asset classes. And so I wanted to address the gold miners tonight, GDX. So let's get into it. Okay. You can't look at the gold miners without first looking at gold. So this is my long-term chart of gold. As you can see, I'm very old. I've been charting gold for a long, long time successfully. But what I want to point out on this gold chart is, first of all, this has been an unbelievable run for gold. Um, just off the charts. And uh, really what I want to point out on this chart is the last 2 year consolidation that we had in gold in the form of an inverse head and shoulders pattern with the left shoulder, the head, the right shoulder, and the neckline right here. So when it broke out, it told us that the next leg up was in progress. And we had a $2,500 price projection, and we got up to 24.98. So these patterns are pretty amazing. It actually got there, and so I'm not saying gold is done or bearish on gold, but in the short term, after a day like today, when gold was down $80 or whatever, normally that's not the end of the drawdown. So, and if you remember maybe a month or so back when I was showing the commercials, the futures groups and the commercials, the big boys, the deep pocketed banks and money centers, and in gold's case, the people in the business, the Newmont Minings, the people that are mining gold and they want to hedge their profits and lock in their gains, and so they're the smart money. And they've been very, very bearish on gold over the last 3 months, maybe. And so that also has told me that, this may be a short-term top. And again, we'll keep looking at it and keep in touch with it because, let's face it, there's a lot of huge deficits out there. There's a lot of inflation. There's a lot of issues. And so, but I don't see gold miners going up much without gold going up, and gold looks stretched at the moment. So we look at a daily chart of gold. That one went back to what, 2003? So that went back 21 years. This is a daily chart. It goes back about 6 months. And so we had a bearish rainbow convergence coming in where all these moving averages were coming together while prices were below that cluster. And so there's two types of price action. Once that happens, the prices could have sat here until the moving averages moved down to give it a test, and then we'd see what happened. That's a type one. This is all a la Tom McClellan, who introduced me to this particular tool. I use many, many tools, but this is an interesting tool. And the second type of convergence is where you get a retracement back to that convergence. It normally doesn't, in this case, it would be a bearish convergence because prices were below and the moving averages were coming down on price. Usually that would stop the momentum and then prices would reverse and that would promise you another lower low. However, gold broke through that surprisingly on Friday, and which suggested that maybe prices were going to go on to a new high. But today that was all refuted with a really big down day, $93. Wow. And you can see that we have a bearish uh, a bearish engulfing pattern today where this red bar prices opened here, closed here, totally engulfed the prior day's price action. And so I see lower prices here. Could it reverse? Of course it could, but the chances are that it is not going to happen. So let's take a look at gold miners. Gold miners look okay. They almost got stopped out last 2 weeks ago, and then last week it had a nice rebound. I think it was up like 7% or something last week. Gold miner stocks, and then today we opened down. I don't see anything overly bearish. Again, the reason for this recommendation was the inverse head and shoulders pattern, the left shoulder, the head, the right shoulder, and then the breakout. So here's where we initiated with a buy. It's been a real rocky road, like up and down, kind of very choppy, and kept raising our stops. And so here we are with I think it's an 8.2% gain, which isn't a lot for gold mining stocks. They're very volatile. And when they get rolling, they really get rolling. But this has been a lot of effort grinding this out. So I'm going neutral at 37.14. We got an 8.2% gain, about a 3% dividend over all those months. And so uh, that's what I wanted to talk to you about. I still think there could be higher prices ahead, but I want to see what happens here. Silver actually has a head and shoulders top that it broke today on the downside. That's bearish. So, this is the inverse of that. This is a bullish inverse head and shoulders. The other is a topping condition. So let's see what's going on here. There's a lot of cross currents going on, and so that's where I'm at. Please like and subscribe. Thank you for watching Chart Built Wealth, profitable investing with technical analysis. Have a great evening. If I don't talk to you, have a great Thanksgiving. Adios.